Earlier this week, Trump Media dropped a bombshell SEC filing, a $361 million loss on its Bitcoin holdings. The numbers are startling. At the end of June, the Truth Social parent held 9,477 Bitcoin, a tiny drop of just 65 coins from the 9,542 it owned at the end of 2025. Yet the fair value of that position collapsed from $836 million to just $557 million. That paper loss is what created the eye-watering figure. So this is not a story of panic selling, it is the brutal reality of mark-to-market accounting when Bitcoin's price is in freefall. Today, on August 11, 2026, Bitcoin is hovering around $64,000, which means the value of their remaining stash has likely fallen even further since the quarter ended. The true question is not about that book loss, it is about what happened next. Fast forward to August 3rd. On-chain data reveals that Trump Media moved approximately 7,000 Bitcoin out of its known wallets, leaving behind only about 2,477 coins. That is not a small rebalancing, it is a structural shift. The most plausible explanation, consistent with corporate treasury behavior, is that those Bitcoin have been posted as collateral for a loan. In plain terms, the company may be borrowing cash against its crypto while the market is down, a high-stakes gamble. If Bitcoin continues to slide, lenders will demand more collateral, a margin call. Fail to post it, and those Bitcoin get liquidated, potentially at fire sale prices. This is the hidden risk the quarterly loss figure does not reveal, and it turns a passive paper loss into an active threat to the company's balance sheet. Context is everything. 2026 is witnessing what analysts are calling a dot-com-style shakeout for crypto. More than 100 blockchain projects have already folded this year. Exchanges are consolidating, and speculative altcoins are being wiped out. Even Trump Media's position in Kronos, the token powering Crypto.com's chain, has suffered a steep drop in value alongside Bitcoin. In this environment, lenders become skittish. The collateral they accepted at $80,000 Bitcoin suddenly looks underwater at $64,000. The very act of moving coins to a lending desk signals distress, or at least a desperate need for liquidity. For a company whose core business is still an unprofitable social media platform, leaning on crypto as a piggy bank is a fragility multiplier, not a hedge. Looking ahead, the immediate trigger point is Bitcoin's price floor. Many lending agreements set liquidation thresholds around the $55,000 to $60,000 mark for loans originated when Bitcoin was higher. We are uncomfortably close to that zone. Should Bitcoin breach those levels, Trump Media could face a forced sale of its collateral, flooding the market and potentially driving the price even lower, a disorderly unwind. Beyond that, the company must file its next quarterly report revealing any new impairments or covenant breaches. Investors in DJT stock need to watch two things: any unusual Bitcoin movement on the blockchain in the coming days, and any filing that mentions a margin call. The clock is ticking. Trump Media is not alone. Other firms like Strategy have also reported massive crypto paper losses this week. But Trump Media's apparent borrowing against its stash adds a layer of systemic risk. It transforms an already volatile asset into a potential chain reaction of forced selling. The lesson here is clear: putting Bitcoin on a corporate balance sheet works brilliantly in a bull market, but when the tide goes out, the margin of safety can evaporate overnight. For any investor watching this unfold, the true red flag is when a company stops being a passive hodler and becomes a leveraged speculator. That is exactly what the August 3rd transfer suggests. Keep your eyes on the Bitcoin price and the DJT chart. The next few weeks could be defining.